Hey, what's going on, YouTube? And welcome back to Tech Conversations. Firstly, if you haven't already, make sure to check out Lux Algo. Lux Algo is the #1 agent to help you find strategies, powered by some of the best trading indicators and used by over 15,000 traders, including myself. And I'll actually show you one of their premium indicators later on in today's video. But right now, if you sign up to Lux Algo by using my link in the description below, you can get up to 45% off their premium indicators. And keep in mind, you can also get 30 days risk-free, so why not try them out? So go ahead and check out Luxalgo. I'll put a link to them in the description below. Also, make sure to check out the Discord, completely free to join. I'll put a link to it in the description below as well. We're almost at 8,000 members, so thank you to everyone that's joined our Discord. Now let's get right into today's video. So, we just had one of the craziest weeks that we have seen all year in the stock market this week. So, yesterday, SPY hit a new all time high again of 673.95. However, news came out that Donald Trump is imposing another 100% tariff on China, which then sent stocks crumbling down, as you can see here. And so SPY later on, after hours, actually hit a low of 646.45. So that's a drop of 4.1% from the high yesterday in the same day. And so it's actually the worst day we've seen in the market since April. So if you take a look here now, year to date, SPY is still up 10.6%. In the last year, SPY is up 13.2%. And in the last 5 years, SPY is still up 94%. And I also want to quickly show you here the fear and greed index. Why? Because yesterday we hit fear once again. So remember, the fear and greed index is a way to gauge stock market movement and whether stocks are fairly priced. So the theory is based on the logic that excessive fear tends to drive down share prices and too much greed tends to have the opposite effect. So yesterday we went back into fear. We are at 29, which means we actually almost entered extreme fear here. And if we take a look here, this is also the lowest reading we have seen since April as well. So looks like there's a lot of fear in the market right now. We'll see what happens next week. But let's go over to TradingView here. Let's take a look at the chart for SPY. Now, like I mentioned earlier, I'm going to go ahead and first show you one of Luxalgo's premium indicators, their signals and overlays indicator. So I'm going to go ahead and enable it here. So very quickly, what does this indicator provide? So it provides a couple of different things. Let me show you some of my favorite features though. So it comes with confirmation and exit signals. So confirmation signals are these red and green boxes you see here. They aim to confirm any potential action a trader might take and are more effective when used in confluence with other features. There are also exit signals denoted by these X's that you see here. These aim to help traders find areas to consider exiting a position based on a previous confirmation signal. We also have the smart trail here in the middle. So this blue and red line that you see here. So an uptrend is indicated when the price is above the smart trail, and a downtrend when the price is below the smart trail. And we also see here the shaded red and blue areas of the smart trail. Those also might help with identifying areas of support and resistance. There are also reversal zones, so you can see those with these red and green kind of clouds there. So like the name mentions, these zones are designed to help the user find potential tops and bottoms. And there's more features to this one indicator, so go ahead and check out Luxalgo. I'll put a link to them in the description below. Now let's take a look here at a couple of different things. So right now we're looking at SPX, so the S&P 500 index. And I'm going to go ahead and go to the 3-month chart here to make this easier to see. And I'm going to go ahead and zoom out here. And we're going to zoom out a little bit more. And let's go down here. So if we take a look here, notice that we have a chart pattern already drawn. So we actually talked about this chart pattern in the last video that I made covering technical analysis on the S&P 500 index. So you can go ahead and watch that video if you wish, but just to recap it, this is what I like to call the mother of all chart patterns. So this is, first of all, the log chart. As you can see here, the logarithmic chart on the S&P 500. And as you can see, this is an ascending channel chart pattern that goes all the way back to 1929. And so remember, the ascending channel chart pattern is a bullish chart pattern, and it's drawn by two trend lines. So here's the first trend line, here's the second trend line. These trend lines are parallel to each other and they're sloping upwards. Now look at where the top trend line meets the chart here. So right here, this was in 1929. What happened in 1929? The Great Depression. This is where we got a touch here for the trend line. And as you can see, we could not really break through and we pulled back. We also have touch here. What was this? 2000. What happened in 2000? The dot-com bubble. We could not break through and pulled back. Now, the reason I talked about it recently is because here, right now, we're currently touching it again. And so, like I mentioned, there will be a lot of resistance at this level, which I think we saw this week. We were stuck in this, in this area right here, could not really pull through it. And so be very careful, continue to watch out for this chart pattern here. Now let me show you something else that is very important to watch, a different ascending channel chart pattern. This one starting in 2020, so over 5 years ago. So I'm switching over to SPY here, and we're looking at the weekly chart. And I've already drawn one of the trend lines here. So notice that this trend line has been there for over 5 years. So where did it first start? Right here, March of 2020. What happened in March of 2020? We had the pandemic. And this is basically where the pandemic bottomed out. And then we have here, 2022. What happened in 2022? We had this massive correction, right? This is where it bottomed out again. We had a couple more touches here, and then most recently here in April. What happened in April? Remember that massive pullback we saw in the S&P 500. So it's touching multiple times here. Some pretty significant events happened. And so now we come in here and we clone this trend line and we move it to the top here. And by the way, we also talked about this trend line a couple of weeks back. So if we go right there, right, we have a couple of touches here. We had a couple of touches here back in August. What happened eventually? Remember, what are we looking for with this chart pattern? We're looking for a breakout out of this chart pattern, and that happened recently. So right here, it finally broke out. It broke out. This was early September. Broke out, and we went much higher. But now look at this week's candle. What do you see happening? We pulled back right to this upper trend line. So this trend line used to be resistance. We broke through, and now we pulled back, and that's where support held. So a lot of the times we see resistance break and turn into support. So far we're seeing this here. However, it's very important that this continues to hold a support now and that we get a bounce from here. Otherwise, we might head back into this ascending channel chart pattern, and there might be trouble down below if we break and close below this trend line. So keep an eye out for this as well. Now, let me show you something that's more interesting than anything, something that has happened 5 times before, and every time SPY has been higher 1 year later, and it just happened again for the 6th time. So let's see. Now remember, past performance does not guarantee future results, but it's interesting to see these things. And so this is from Carson Investment Research. So that's the source there. And so if we take a look here, one of the best 6-month rallies ever equals more good times. So what this is doing is it's looking back at any 6-month period for the S&P 500 since 1950. And it looks at all the times where the S&P 500 has been up more than 35% in that 6-month period. And so we take a look here. This has happened before 5 times. It just happened again on October 8th. But what we notice about the last 5 times that this has happened is that 1 year later, SPY has always been higher. So in 12 months, right, when it happened in 1975, the S&P 500 was up 7.5%, 1983 up 13.6%, 1999 up 10.7%. This was 2009 up 4%, and in 2020 up 31%. Again, this just happened on October 8th, because if we take a look between April 8th and October 8th, that's a 6-month period, the S&P 500 was up over 35%. And so it just happened. And so it's going to be interesting to see what happens after 12 months, because after 12 months, every time this has happened in the past, the S&P 500 has been higher. Again, that does not mean it'll be higher this time. This is something that's, again, more interesting than anything, but it's just interesting to see and interesting to keep track of. So we'll see. Let me know what you think will happen in the comment section below. Do you think we will bounce from here, or will we continue to pull back? If you have any questions, feel free to leave them in the comment section below. Check out the Discord, a link to that in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.